Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today, we are diving into a report from the Federal Home Loan Bank of Des Moines. And no, it's not about your neighbor's mortgage, but stick around because it does impact the entire housing market. We're going to unpack this report, which is like deciphering a financial treasure map, to see where this bank is heading and what it means for you. First off, the date of this report is February 24, 2025. This is when the events in the report began. So, who is the Federal Home Loan Bank of Des Moines? They're basically a bank for banks. They don't lend money directly to people like you and me. Instead, they provide funds to other banks, credit unions, and insurance companies. These local lenders then use that money to finance home loans and other community development projects. This report is called an 8K, also known as a current report. Companies use it to inform investors about major events that could affect the stock or financial health of the company. One of the key things highlighted in this report is about what they call creation of a direct financial obligation. In simpler terms, it's about the bank taking on debt, which is normal for most companies. Specifically, it discusses consolidated obligations. Think of these as IOUs that the bank sells to investors to raise money. This money then goes out to other financial institutions to help them provide loans. It's important to note that these consolidated obligations are backed by the financial resources of the federal home loan banks, not by the United States government, so it's not the same as a government bond. The report mentions Schedule A, which details all the bonds and notes the federal home loan banks plan to issue. It's essentially a list of debts they're committing to. These bonds and notes help the bank function and influence the availability of money for mortgages and other loans. The report also notes that the bank might change how it reports this information in the future. This heads up is a reminder that these reports are snapshots in time and the details may change later. The report emphasizes that while the issuance of these consolidated obligations is important, it doesn't mean every single obligation is a make or break deal. The report's just saying this matters, but don't overreact to every little detail. Here's another thing to keep in mind when going through the report. This report doesn't cover any agreements where they might swap interest rates with another party. These agreements, also called derivative instruments, are used to manage risk but aren't included in this specific document. The bank also points out that just by reading Schedule A, you can't track the total amount of debt they owe. That's because it excludes some short-term debts and doesn't show how they use the money they borrow. To get the full debt picture, you'd need to look at their regular financial reports that they will share later on. There's also a disclaimer about the numbers you'll see. The report says that the amounts listed are the face value of the debts. These amounts don't include any discounts or premiums. Now let's get to the financial statements. Exhibit 99.1 provides a detailed schedule that goes into the financial obligations. Finally, the document concludes with a signature, ensuring its accuracy and compliance with regulations. So what does all of this tell us? The Federal Home Loan Bank of Des Moines is actively raising funds through debt to support the housing market and related lending activities. However, there are some potential areas to watch. The bank's reliance on debt could pose risks if interest rates rise or if the housing market weakens. These scenarios could make it more difficult for the bank to meet its obligations. On the other hand, the bank's efforts to manage risk through financial instruments could help to offset these challenges. In conclusion, the Federal Home Loan Bank of Des Moines plays a vital role in the financial system, particularly in supporting the housing market. While the bank's reliance on debt presents risks, its proactive approach to risk management and its commitment to transparency provide some reassurance. It will be important to monitor the bank's performance and the broader economic conditions to fully assess its long-term outlook. That's all for this episode of Corporate Decoder. If you found this analysis helpful, please give us a thumbs up, leave a comment, and subscribe for more deep dives into the world of finance. Until next time.